In the last 5 years, Tesla stock has grown by an impressive 1,385%. But year to date, the stock has performed poorly, leaving many investors to wonder, are the good days of Tesla stock over, or is there new innovations in artificial intelligence and new products that are gonna reignite the growth and bring back the good old days of the stock? I've spent days analyzing the stock from top to bottom, even reading the new Elon Musk autobiography so that I could provide you with my price prediction for this stock. Now, before I provide you with my stock price prediction, I just want to say that all of these different factors were analyzed. So the market, the management team, valuation, company health, product, etc. And this was done Warren Buffett style. And the great news is that Tesla meets all of these different criteria. So it really comes down to the price at which you're buying in the particular stock. Now, one key factor in my prediction is the revenue growth that is expected in the model, and you're going to see what the number is exactly. But what I did for that is I looked at many different industry reports, and what they all say is that somewhere between 7 to 13% CAGR is expected for the electric vehicle market. I also looked at the historical data for Tesla, which if you want to know how to get automatically, you can just use an add-on like Y-Sheets where you type the company, select annual data, click on get data, and you're going to get all of the company's financials. But this number is absolutely clear, so we can forecast what the expected value of the company should be after 5 years. Another key factor in the price prediction is the exit, the amount that we're going to be able to sell the shares of the company at the end of the forecast period. So what I did for that, I set up this model that uses Y-Sheets formulas where you can just type in the company, in this case Tesla, and it provides you with all of the different historical data. For this model specifically, I focused on the P/E ratio as the metric that we're going to use for the exit. And here more specifically, I looked at the quarterly data, and what I found on the quarterly data were the different ranges of the P/E ratio. So as you can see, we have the P/E ratio right here, and we can see this number on a quarterly basis. So this was the P/E ratio at the time the financials were released. So this particular date right here, and you can see that this goes back a long time. Now, the bad thing and the good thing is that there's a lot of fluctuation in terms of the price. The lowest that it gets is close to this number of the 25 range. It can get as high as 144. There's really a lot of fluctuation, and that is a function of the hype that Tesla has built up in terms of like new products and innovations that we're going to talk about that are also taken into account in the model. Now, just based on the data, my prediction forecasts a P/E ratio value of 30 as the base case, but there's also another addition into that I'm going to show you once I show you the calculation itself. Now, when it comes to my price prediction, there's two different factors that are really going to make a huge difference, and I accounting for these different factors in the prediction. One of them is any update related to the new Tesla bots that Elon Musk announced. I think there's a big potential for these different bots in like manufacturing and different areas like that can help to increase productivity and justify the high cost that they're going to have, at least in the near future. The other thing that can be really big and have an impact, a lot faster than perhaps these bots is the new rumored car that Tesla's going to release. So as you can see, this would be a new car that is the most affordable in the lineup of different Tesla cars. And this is what the renders say it's going to look like. Now, we don't know this for sure. There's going to be an event on Thursday that's going to announce this, and we're going to have the actual look. We'll see how people react, but this is also going to be built into the model. So regardless if it's a positive or negative outlook on this, it's going to be reflected in the price prediction. The last thing that is also taken into account for this prediction is the possibility that the company is going to release their Tesla Robo Taxis, or the fact that they're going to actually be able to solve the self-driving car problem that they're actually facing, because if they're able to do that, the opportunities and the ways in which they can monetize this are limitless. Now, it's gonna take a lot longer than Elon Musk probably anticipated. If it does happen, there's no guarantee that this is actually a solvable problem. But if the company is able to figure it out, that's really gonna impact the growth. But most importantly, the P ratio that's implied in the calculation. Now, moving on to my actual price prediction, you can see that on my base case, the present value per share is 288, and as you can see, I'm using Y-sheets to pull this data in real time. This is the price. So right now the stock is trading at $244, and this represents an upside percentage of 18%, which is a good investment opportunity. But you have to understand that there's basically two scenarios that can take place, and they're both valid because they're both possible. But what I did is I kind of averaged out the two different scenarios to provide the price prediction, but I want to show you what the best case scenario is, the worst case scenario is, so that way you're prepared and you can be ready for whatever takes place, whether like these developments in AI and robots, etc. do take place, or if they don't take place, which is also likely, or maybe they do take place but it's way later into the future, you don't suffer or you don't know what you're getting into when it comes to investing in Tesla stock. So first things first, all of the inputs of the model are in yellow, and these are everything that we're gonna input. Everything else is basically a result of the inputs with the current numbers. So what we can see, this is a TTM, again, obtained from Y-sheet, so you can get the data right here automatically. But what we can see is right away, the revenue growth is 13%. I think this is a very conservative number, and the reason why is because it's very much justified by the market reports that I looked at, where it was saying the growth is expected between 17 to 13%. Now, Tesla is a market leader, so they're supposed to get more than the market average. So perhaps you could increase this a little bit more to maybe like 15%, and this would still be congruent with the numbers that I show you in terms of the past revenue growth. Now, there's also been some issues when it comes to the manufacturing, the quality of Tesla vehicles that can also be taken into account, as well as different governments not incentivizing the purchase of electric vehicles. So that's why I picked 13% for this number. The terminal PE, this is when it becomes very key. I think 30 is pretty reasonable when it comes to Tesla stock, because regardless of what happens in this event that's coming on Thursday, there's always gonna be the hype that maybe self-driving vehicles and these Tesla bots are not gonna come now, but they're gonna come into the future. When they come, it's gonna be huge for the company. So I think 30 is pretty reasonable. Now, this is where it gets interesting. So what I did is I took the probability that they're gonna be able to release self-driving vehicles to the mass market. So I calculated this probability to be about 30%, at least in this period of 5 years. You could obviously change this probability based on your own research. And then what I said is, I believe if they're able to do this, then the P ratio is gonna go 40 at least, which I think is quite conservative if this were to happen. You know, we've seen already Tesla stock have a P ratio of 100, so 40 seems pretty reasonable. And so I took the sum of both numbers, and this gives us a terminal P ratio of 42. Now, that gets all factored right here in the revenue, where we're growing the revenue by the numbers right here. But this is where there's a key nuance. So this is in 2027, where I believe there's a chance that the company is able to release the self-driving. And even if they already have this, the technology is already there, there's so many regulations, there's so much friction involved into actually releasing something like this. So I don't think it's gonna have as much of an impact as people can expect right away. It will over the long term. So what I have is I have the growth plus I have the probability, so this 30%, and the value that I think they can get. So in this case, this is 3 billion. And what I did is I looked at the revenues of all the different companies that are doing ride sharing, so like Uber, Lyft, etc. So I think this number is quite reasonable if Tesla's able to pull off the self-driving technology. So I added this into the equation, and then I said, okay, now once they have this figured out, then the revenue growth should jump. jump to 20%, and then here I think they're gonna have another big jump where you can go to like 30%. You know, maybe you could do like 25 too as well. I think that's a reasonable number, but in this case we'll keep it at 30. The other thing is the net income, and this is critical so we can calculate the price at which we're gonna sell, which you can see right here. So this I kept it at 13%, which is very consistent with the current margins of Tesla, but 2027 the margins should be higher because a higher percentage of the revenue will come from very high margin business, which will take place if Tesla's able to figure out either the robots or the self-driving. So in this case, I raised it to 18%, and then through added efficiencies, I think it can go to 23 and then 25% in 2029. Altogether, this would be the market cap of the company. And then if we take it by the number of shares of the company, then this would give us a price of 288 per share. The discount rate that I use is 15%. You can also use a higher discount, and I think that's pretty justifiable due to the level of risk that's involved investing in Tesla stock. So as you can see, if I change it to now 20%, this number doesn't look as good, but I think just based on the current interest rates and the fact that the company is a huge company already, 15% is pretty reasonable. And then the upside downside is this number right here. One thing to keep in mind is the completely different case. That is, the company is not going to be able to release this new updates. So if that is the case, let me adjust the model with you in real time so you can see what my worst case scenario really is. So in my worst case scenario, I still would have the 13%. I would have the PE right here to be 30. The self-driving probability would bring to 0. And then we have 13%, 13%, 13%. I think we can also keep another 13% right here, and then maybe another 13%. Well, this would be fine because then the probability goes 0, so this should be fine. And then the margins here, I think the other thing that's really going to impact Tesla in the near future is the competition, especially BYD, which is such a formative threat for the company. So you could say margins could decrease, but at the least I think I would keep them consistent. And maybe over time, you know, there is some efficiency, so maybe like 15%, which is also congruent with the big car manufacturers that are public. This would be the market cap of a company. At this discount rate, it makes no sense to invest in this particular stock. Now, this is a very, very bad case scenario. And you can also see the different scenarios right here. If you have a P ratio of this number and you have revenue growth of this, how is this going to affect your investment and the value per share? So this would be the only winning case basically, and then this would be your CAGR return. So I hope this provides clarity into what it means to invest in Tesla and how these different releases can have an impact on the actual value of the company. I hope you enjoyed this video. If you did, make sure to subscribe to the channel, and I'll see you in the next one.